Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is July 13th, 2017, and this is just a quick view of a day trade trading options. It's kind of a little bit after the fact, and I am showing you the virtual account. I'm not showing you the real account, but I'm going to show you, you know, remnants of my real account, what actually was done and when it was actually done, to kind of help do a review of this trade. Like I say, all this is for educational purposes only. Educational purposes only. Trading is risky. You can and will lose money at trading. So seek your financial advisor, seek your significant other, see if trading is something that's suitable for you. Trading is definitely not for everyone. Uh, so let me jump over to the chart. Let you see that. My thing is, I talk about this 5-minute play all the time, this morning opening trade. If we look at that, zoom in and take a closer look at, got a little bit out of the way there. Let's see if I can get it back. Up. Man. Don't you just love these charts? Right here, we actually had a doji. Is that the day? No, that's the 12th. I didn't think that looked like the day. That was yesterday, the doji day. Don't you just love this stuff? Always must be so difficult. There we go. And it's kind of hard to see on that chart, but it wasn't a doji. It was a green candle up, and where my charts are jumping, I need to restart. But it was a green candle up, but I didn't take the trade there because I was looking at the market going from here to there. It went a little bit higher, but even from there, this was at about 90, 57.90, and to here was 5,800. So your 10 points was there, and you did get your 10 points if you was able to get into that trade, and you rode it all the way up. So that was an easy, nice trade this morning if you traded that. What I usually do, and I wasn't here this morning. I was out taking my bike ride. But when I got in, I saw the market had already gone up here, and it was pulling back. So my next best play is to play out. I like playing off this what we call, this is our L1 line. And if the market comes down here to this L1 line, I like taking a trade long off of this. And that's what I ended up doing. And on QQQ, it came down and just touched it. So I was in right there. See that time down there at the bottom? Time down here? See what my thing is saying? 10:35, right on that candle. I'm going to bring over my live account and show you exactly what I did. My entry, again, I have a plan. When I'm trading, I have a plan. When I'm trading, I have a plan. When I'm trading, I have a plan. So my plan was, if it came down here, I was willing to take risk to place a trade. Whatever. Again, I'm not concerned about what the price of my option is at that time, and all. But I'm taking that. I know I want to take that trade, and all. So I was able to get into that trade down here at that point, and all. It cost me $3.95 times 100. Times how many contracts I have, which is not important, but the math is important. This is it'll cost you $395 to place one contract. That's an option contract. Now, once I'm into my trade, the next thing is, where's my stop? My stop is, if you close below this level, on a red candle, I'm out of that trade. But again, I've been doing. I got, you can say, luck, experience, or whatever you want to call it. I don't really. It doesn't matter to me. The thing is, when you know your indicators, you use your indicators, you see what the market is doing. At times, you expect to take that trade to be going back up. Again, I don't do this trade every time, but today it looked good, so I ended up taking this trade back up to here to get out. As you can see on my thing right here, it's at 22. I haven't reached that yet, but I may adjust that to 17 to get me on out of there. Because again, usually I only like making 10 cents on this, and 10 cents on this is only 405, and I was above my 10 cents, as you can see when I took this picture, but I wasn't out of it at the time. My next place is, that would have been 12 is where I would really want to get out of this trade. The next place that I would want to get out of this trade is at 17. Then the next place above that to get out of it is what you see on the virtual trade, on the virtual account, is 22. That's 422 that I'm looking at. And right now I'm looking at on the QQQ. I don't want it to close below this line here. You know, I don't want a good trade to turn into a bad trade. So that's what I'm kind of watching as we go here. So I've explained my entry, why I got in where I went in it, and why I got into this trade. I explained where my stop should be. And then the next thing, okay, where's my target? My target, I could have had a short target here, but my target really was back up here to this line, which it did come here just close enough where I could be out of this trade already. You know. And then my next target was up here to close out the remainder of my contracts, whatever I have. So that's pretty much it. That's a quick day trade of actually how I trade and where I enter the queues. You can see which contracts I'm actually trading. And you can see, I kind of explained to you my entry, stop, and target. Again, like we say, trading is risky. You can and will lose money at trading. So please be careful. Please seek out your significant other, your financial advisor, and make sure trading is something that's suitable for you. Okay, you can visit us. I will be having this video out here on Right Side Trader, where you can see this video. And I might put a couple of them out here. I did a couple of recordings trying to record this. So again, this is Solomon from Right Side Trading, where you can learn to trade on the right side with confidence. Subscribe, you know, join our website, you know, to get all the latest and greatest things that we're doing. Again, thank you for viewing and have a great day. Talk to you later. Bye.